Private Lender Podcast, Episode 81.
The Private Lender Podcast quote of the day comes to us from Benjamin Graham, who said, "Buy not on optimism, but on arithmetic."
This is the Private Lender Podcast, the show that shares practical advice and know-how for new and seasoned lenders, from private mortgages on single-family houses to joint ventures on commercial projects and beyond. Discover details about investment vehicles that you won't find at your local bank or online broker. Listen and learn from private lenders and real estate investors, as well as from professionals and entrepreneurs, as they share the details, strategies, and the insight that allows for successful and prosperous lending. Now, get ready to increase your ROI. Here's your host, Keith Baker.
Hello and welcome to the Private Lender Podcast, the place to be if you're looking for practical tips and advice for being an active and successful private lender. If you're looking to build wealth without banks or Wall Street by utilizing time-tested methods in this ever-changing world, then my friend, you are in the right place. My name is Keith Baker and I'd like to welcome you to episode number 81. And today I'll be talking about the three basic rudimentary concepts of promissory notes, lending money, and structuring loans. The beauty of private lending is that you can be very creative in the way that you construct a note. Consider these prototypical building blocks for the private loan that we're going to talk about a little bit later. It's really basic math, kind of accounting stuff, but I figured I get enough questions from time to time at RIAs that it's worth addressing on the podcast. So let's get into that. But first, of course, time is running out to get your tickets to the Quest Trust Company's self-directed IRA Expo in Houston this August 23rd through the 25th. And this is 2019, just in case if you're listening to this down the road. And I've heard a rumor that VIP tickets have already been sold out, but there's still general admission tickets available. And of course, you can go get a 25% discount off of those tickets at privatelenderpodcast.com/expo. Use promo code PLPodcast. And I also want to tell you that the Private Lender Podcast is teamed up with Quest Trust Company, and we're going to coordinate a happy hour / meetup at the Axis Lounge in the Royal Sonesta Galleria the evening of August 22nd, 2019. That's when, after all the vendors are finished setting up, there will be vendors, speakers, sponsors of the expo will be there, attendees, VIPs, general admission attendees. I'm going to be there because, well, let's face it, there's bourbon, so I'll probably be pretty close to it. But this is going to be a pretty dense group of people. The Quest Expo draws in people from all over the U.S., and in fact, I met Steve and Michelle Green from New Zealand were on the podcast after I met him at the expo last year. Because of that, we decided we're not going to get sponsors and have email lists and cold chicken nuggets or chicken wings and pizza. We try to minimize the tire kicking. And if you want to come and hobnob with these folks, you're going to have to bring, well, you don't have to pay. You can just come on out. But the food and drink will not be free. And I suggest you come on out August 22nd, 6:30 p.m. roundabout. And the good news is the bar is right next to where the expo is going to be. So it's all going to be right there. You can go to my Facebook page, I guess, for more information, or just I'll put it up on the website at some point. But yeah, the Royal Sonesta Axis Lounge, August 22nd, Thursday evening, 6:30, happy hour. Going to be tons and tons of investors there. I highly recommend that you guys come out. So let's go ahead and get down to the brass tacks in today's topic, which is the three rudimentary loan concepts upon which creative lending and private lending is built. And these are, quite simply, the interest-only loan, my favorite. Then there's amortization, or the amortized loan. And then there's our trusty old friend, the balloon payment. Big fan of the balloon payment. It's a nice trigger for default in case you got to go get your money back via the property. But it can be quite useful. And you don't see it too much on residential, but you do see a lot of balloon payments in commercial. But we'll let me dive into number one, and that's the interest-only loan. And there's a supplement to this. I have an amortization schedule on the show notes page. This is episode 81. So let's go to privatelenderpodcast.com, go to show 81, and there'll be a link to an Excel spreadsheet that's got some really horrible graphics, my logo on it, but it's a basic investor-friendly amortization schedule, and has an option for interest only. So you just get your monthly payment. And the beauty thing about an interest-only payment is if you loan somebody, say $100,000 at $100,000 at 12%, for a year, then you're just going to get $1,000 a month. That's the interest that accrues. So you get your payment is $1,000 a month, but at the end of that note, you still have to pay back the original $100,000 or that balloon, because it's a huge, huge chunk. Where amortization comes in is more in your retail mortgages. Oh, Clint just says, yeah, the VIPs are sold out for the expo. Okay, well, cool. It's going to be bumping this year. Okay, squirrel, shiny object syndrome. I'm sorry. I'll get back to this. On the interest only, the amortization, where part of that payment is going to pay off the interest first, and then a little bit of it will go towards paying down the principal of that loan, such that after X amount of time, you don't owe the full $100,000 at the end. Like I said, that's really good with like 30-year mortgages for your retail buyer, people who, normal home buyers, not investors. But there is a place for it, and it comes in with the commercial and sometimes with the residential as well. You can have a 30 or 20-year amortization that'll base your monthly payment will be based on that amortization schedule on a 20-year note. However, in say 5 years, there'll be a balloon payment due. That note will be due. You have to pay back all of whatever's left on your principal, whatever interest is owed, and you'll have to pay back your interest as well. So that is kind of the basic concept of the three ways that private loans are structured. I like the interest only, like I've said before, because you don't have to worry about how much is going to principal and how much is going to interest. You can figure out how much interest somebody's paid for their 1098 at the end of the year, very simply with some simple math, pencil and paper. You don't need a big calculator or anything like that. And I'm not all that smart, and I don't like math that much, so that's why I like the interest only. It just keeps it real easy for me. Even when I loan to owner finance deals, like my friend Mitch Steven or Landon, those are interest only loans. And at the end of those 3 years, I get all that money has to be back, or they have to refinance me out, or I'll do another loan for them, at agreed rate for usually 3 years on those type of deals, because those guys need at least 3 years to get the cash moving. So anyhow, if you got any questions, hit me up, Keith@privatelenderpodcast.com. I know I've kind of rushed through this a little bit today, and we'll get into it a little bit more later on, but this is kind of part one, and we'll put a little bit more detail on part two in a couple of weeks. But those are the three things you need to get your head around in the word amortization, interest only, and then the balloon payment as well. So that's all I'm going to have for you guys today. So if you're driving home, hope you're not watching this, but I'm glad you stopped by. I want to say thanks for coming by, popping in, and I just need to do a little bit of housekeeping before I sign off. Remember, go to privatelenderpodcast.com/expo to get 25% off your ticket to the Quest Self-Directed IRA Expo. And Clint said, yeah, VIPs are sold out. And come by the kickoff happy hour at the Axis Lounge at the Royal Sonesta Hotel in Houston, Thursday, August 22nd, starting at 6:30 p.m. And the only thing I ask for listening to this show is to please help spread the word about it and leave an honest rating and review over at iTunes, especially iTunes, because it's the 400-pound gorilla in the room. But I would appreciate a rating and review wherever you listen to this podcast, whether it's on Google, Stitcher, SoundCloud, or many other various platforms out there. I would greatly appreciate it. It helps get the podcast into the ears of more and more people. So that means more and more successful lenders. That's my slogan, without banks or Wall Street. It's more without banks, because once the money tightens up, it's the private lenders that are going to keep the economy going with in the housing market and the less than desirable unlisted properties. I'd love to give my best Satchmo. What a wonderful world. But that's the goal here at the Private Lender Podcast. Independence. I'm a Texan, so we're kind of fiercely independent. But that's the goal, is to create as many private lenders so we don't need banks to facilitate our investing. And remember, I don't shun Wall Street. This is just a part of good diversification. A lot of this economy is round up because of it. So, or most of it, I should say, not some of it. But anyhow, also, if you could please go connect with me on social media, like many of you have already. I've got a little audience. This is cool. It makes me a little nervous, but that's cool. But I'm on Facebook, Instagram, Twitter, LinkedIn, Bigger Pockets, and links to all those channels can be found at privatelenderpodcast.com. And now it's time to say goodbye. So besides health, wealth, and happiness, I do wish for you self-awareness and, of course, much, much successful and profitable private lending. Hope you guys take care, and we'll see you on the next episode. Bye.
Thanks so much for listening to this episode of Private Lender Podcast with your host, Keith Baker. For more great content and to stay up to date, visit privatelenderpodcast.com. If you enjoyed today's episode, please rate and review, and we'll catch you next time.